Thank you very much. Thank you, Cathaoirleach, and we're here today to begin our consideration of Finance Bill 2022, which will give the necessary legal basis to the decisions that were announced in the budget and make a number of necessary changes to tax legislation. The year's Finance Bill sets out the provisions to bring effect to the measures announced in the budget. This is a cost of living budget that underlines the government's commitment to help individuals, families and businesses deal with the challenges of rising prices. The bill implements a range of targeted tax changes, including specific measures to support families, businesses and to address the many challenges that are facing our society, including housing and climate change. The bill also contains a number of administrative changes to the tax code. It reflects recent international developments and it seeks to protect and enhance the integrity of our code of taxation. I look forward to bringing this important legislative instrument through the Oireachtas during the coming weeks. To help families, individuals and businesses deal with the rising cost of living, Minister McGrath and I have announced a package of one-off measures worth €4.1 billion. This is accompanied by budgetary measures for 2023 worth €6.9 billion. This brings the total size of budget 2023 to €11 billion. In addition, there is a further €300 million in public service support measures funded from the Contingency Reserve Fund. I appreciate, Cathaoirleach, that these are very significant measures. However, I also appreciate that the needs of families and businesses are very significant. The strength in tax revenues, particularly the strength in domestic tax revenues, has provided us with the additional means to undertake such a response. One of the core objectives in Budget 2023 is to ensure that workers don't find themselves in a position where they pay more income tax solely because of inflation. There are so many people who work so hard but whose earnings push them outside of access to any additional support from the state. We need to help them too. We need to put money back in their pockets. I therefore announced on Budget Day an income tax package to the value of over €1.1 billion. I'm increasing the standard rate cut-off point by €3,200 to €40,000, with proportionate increases for married couples and civil partners. I'm also increasing the main tax credits for personal, employee and earned income credit by €75 and a home carer tax credit by €100 to support stay-at-home parents. The basic personal tax credit available to married persons and civil partners jointly assessed to tax will increase from €3,400 to €3,550, while in all other cases the value of the tax credit will increase from €1,700 to €1,775. The value of the home carer tax credit increases to €1,700. The value of both the employee tax credit and the earned income tax credit will also increase from €1,700 to €1,775. Where an individual is entitled to both the employee tax credit and the earned income tax credit in the same year of assessment, the aggregate of credits available to him or her under those two provisions won't exceed €1,775. Furthermore, I am increasing the second USC rate band of 2% from €21,295 to €22,920, in line with the 80 cent per hour increase in the national minimum wage. Housing, of course, continues to remain one of the biggest challenges facing the country, and a whole of government approach is addressing this challenge. In the Finance Bill, a number of provisions will make their contribution to this challenge, including the rental tax credit of €500, changes in the Help to Buy scheme and changes to the pre-letting expenses regime to assist landlords preparing properties for rent. The introduction of the vacant home tax and changes to the residential zoned land tax aim to increase the supply of homes for rent and purchase. Also in the property sector, I am providing for a defective concrete blocks levy to raise some of the funding required for the block grant scheme. Following the announcement of this levy on budget day, and in light of subsequent comment on the measure, I have determined that the rate at which the levy will apply will be halved from the planned 10% to 5%, and the move will come into effect on the 1st of September 2023, as opposed to the 3rd of April 2023. This will allow all parties more time to prepare for its introduction. I've also reduced the range of products to which the levy will apply. This finance bill provides that the levy will apply to pouring concrete and concrete blocks under two harmonised EU standards. It will not apply to precast concrete products. As I have said, the Government appreciates the challenges that businesses are facing with significant increases in electricity and gas costs. These challenges come on top of Brexit and the COVID-19 pandemic, with the necessary public health restrictions and closed premises. Therefore, I'm introducing a temporary business energy support scheme called TBES to provide additional support to business during the winter months. While I announced the scheme on budget day, it was to apply at that point to tax-compliant businesses carrying out Case 1 trade. This has been extended in the Finance Bill, and it will also apply to those carrying out a Case 2 profession. The scheme will also apply to new businesses, and eligibility for relief in such cases will be calculated using a deemed energy price provided by Sustainable Energy Authority of Ireland. This will be based on data provided by suppliers and the Commission for Regulation of Utilities. A monthly cap of €10,000 per trade or profession will be applied. However, in certain circumstances, qualifying businesses that operate across more than one location and that have multiple meter point reference numbers may qualify for increased relief. In such cases, the monthly cap of €10,000 may be increased to a maximum of €30,000. The scheme falls under the European Commission Temporary Crisis Framework and is subject to state aid approval. As I announced on budget day, it's intended that the scheme will operate in respect of energy costs relating to the period the 1st of September 2022 to the 28th of February 2023. However, pending revision of the Temporary Crisis Framework, which is expected to occur by the end of this month, it was impossible to provide for an end date to the scheme beyond the 31st of December 2022. I hope to amend the legislation at committee stage to include the 28th of February end date after the anticipated amendment of the Temporary Crisis Framework. Another regulation under discussion at European level is the Agricultural Block Exemption Regulation. There are a number of budget proposals that are dependent on the outcome of these negotiations. These include the introduction of the provision for accelerated capital allowances for the construction of slurry storage, and the extension of a number of agricultural tax measures due to expire at the end of December 2022. Again, and subject to the outcome of negotiation, I would hope that these can be addressed by committee stage amendments. The provisions relating to the key employee engagement programme will also be addressed during the passage of the bill. As I indicated at budget time, the clear intention remains to legislate through amendments introduced at committee stage so as to provide for the buyback of keep shares by the company from the relevant employee and to raise the lifetime company limit for keep shares from €3 million to €6 million. I now turn to the contents of the bill itself. It is, Cathaoirleach, a substantial bill running to over 200 pages. The first sections deal with income tax items, some of which I discussed earlier. I'd like to draw members' attention to Section 6, which provides for the increase in the small benefit exemption to €1,000 and the increase in the number of vouchers from 1 to 2. Members will recall that this measure was introduced by financial resolution on budget night and therefore takes effect in the current tax year. Section 4 of the bill deals with the COVID-19 related layoff payment. This payment is intended to plug the gap for employees who lost the opportunity to accrue reckonable service due to layoffs caused by the COVID-19 public health restrictions. Statutory redundancy payments are exempt from income tax, and therefore these COVID-19 related layoff payments will also be exempt from income tax. Section 7 extends the benefit in kind exemption to cargo bicycles and the e-cargo bicycles by increasing the threshold to €3,000. This is a further fulfilment of a commitment in the programme for government. Our shared future also aims to provide a proportionate increase for e-bikes and cargo bikes, and the changes will apply from the 1st of January 2023. Deputies will recall that a number of tax exemptions are not currently reported to revenue. Section 8 provides for the automatic reporting to revenue in respect of 3 specific measures that are made without the deduction of tax. These are the remote working daily allowance of €3.20, travel and subsistence expenses and the small benefit exemption to which I referred earlier. Section 9 gives effect to the budget announcement to increase the standard rate band and a number of tax credits from the 1st of January. Section 12 includes a new €500 tax credit for renters, with each tax-paying tenant in a particular property being eligible for the credit in their own right. The credit is aimed at and will only be available to renters who do not receive state housing supports. The credit will also be available in certain circumstances to parents who pay rent on behalf of their student child who is in third-level education. Sections 16 and 17 provide for the taxation and relief rules for the pan-European personal pension product, which has been introduced as required under Regulation 2019-1238 of the European Parliament and of the Council of the 20th of June 2019. Section 20 provides for an exemption of up to €20,000 from income tax for certain profits arising from the production, maintenance and repair of certain musical instruments. These instruments are early Irish harps, Irish lever harps and uilleann pipes. Section 25 increases the cap on allowable pre-letting expenses from €5,000 to €10,000 and reduces the minimum period for which a property must be vacant from 12 months to 6 months. Section 34 extends the final date when films can be certified as qualifying for the Film Corporation tax credit from the 31st of December 2024 to the 31st of December 2028. This amendment will be commenced at a future date, subject to EU state aid approval. Section 37 confirms the budget changes to mineral oil tax rates to come into effect from the 12th of October 2022 and provide for further rate changes to come into effect from the 1st of March 2023. The section provides for the extension of reductions in certain mineral oil tax rates which were introduced earlier in 2022. Provision was made in Finance Act 2022 for these rate reductions to be reversed from the 12th of October. The reversal of these reductions will now be implemented from the 1st of March of next year. The section also provides for increases in mineral oil tax rates as set out in Schedule 2 of the Finance Act of 1999 on auto fuels effective from the 12th of October 2022. These rate changes arise from increase in carbon charge rates as set out in Schedule 2A of the Finance Act of 1999, which came into effect on the 12th of October. Section 38 provides for the budget increases in the rates of tobacco product taxes of 50 cents on a pack of 20 cigarettes in the most popular price category on a VAT-inclusive basis, where pro-rata increases on other tobacco products. Section 44 provides for the extension of the 9% rate on the supply of electricity and gas until the 28th of February of next year. Section 47 provides for the reduction of the flat rate addition for farmers to 5%. Section 55 provides for the zero rating of VAT in newspapers, including e-newspapers, certain period products, non-oral hormone replacement therapy medicines, non-oral nicotine replacement therapy medicine, and automated external defibrillators. The bill makes a number of relations in relation to stamp duty, including clarifying aspects of the higher stamp duty rate of 10% charged where a person acquires 10 or more residential units in any 12-month period. As I announced in the budget, the bank levy will be extended for a further year and will only apply to those banks that will continue to operate in the Irish market going forward. This means that the levy is expected to generate in the region of €87 million in 2023. With regard to capital acquisitions tax, Section 65 of the bill makes a number of amendments to the Act of 2003 to take account of recent amendments to the Succession Act of 1965 made by the Birth Information and Tracing Act of 2022. Section 67 provides an exemption from tax for any payments made under the COVID-19 Death and Service Scheme for healthcare workers. In the miscellaneous provisions section of the bill, Section 84 provides for a new vacant home tax to be introduced in 2023. The measure aims to increase the supply of homes for rent or purchase rather than raise revenue. The VHT will be self-assessed and administered by the Revenue Commissioners and will apply to long-term habitable vacant residential property that is subject to local property tax. The bill will be paid by property owners. A property will be considered vacant for the purposes of the tax if it is occupied for less than 30 days in a 12-month period. The first chargeable period will commence on the 1st of November 2022, and the owners of vacant properties will be required to file a return in November 2023. Payment of the tax will be due on the 1st of January 2024 at a rate equal to 3 times the property's base LPT rate. It will be in addition to LPT. The bill also provides for a number of exemptions to ensure property owners are not unfairly charged for temporary vacancy arising from genuine reasons. This will include properties recently sold or currently listed for sale or rent, properties vacant due to the occupier's illness or long-term care, and properties vacant as a result of significant refurbishment work. The measure seeks to achieve an appropriate balance between incentivizing owners of vacant homes to bring their properties back into use and not penalising homeowners for normal temporary vacancy, with the primary objective of the tax being to change behaviour rather than raise revenue. Section 686 provides for the defective concrete block levy. Sections 87 to 90 deal with TBAS, and there are the usual technical amendments and care and management sections. In conclusion, the bill sets out the legislative provisions to bring effect to the tax measures announced in the budget. It's a cost of living budget that underlines, as I said, Cathaoirleach, the government's commitment to help individuals, families and businesses to deal with the rising cost of living and the rising cost of doing business. The bill implements a range of targeted tax changes, including specific measures to support individuals, families and businesses, and I commend the bill to the House. Thank you.